Hello, and a warm welcome to another exciting episode of Market Views. It's a great delight having you to join us as we continue with our reviews and analysis, sharing our views and thoughts regarding the issues that are revolving around our local capital markets. My name is Kudakwashi Taimo, and today we want to look at the recent updates that were published by Delta Corporation as well as Econet Wireless for the third quarter trading updates. As always, cap it off just looking at Tanganda's plan to raise 8 million on the Victoria Falls Stock Exchange. Joining me on set to deep dive into these issues is my fellow analyst. It's always a pleasure having you on set, Tapio. Yeah, well, so let's first start by looking at Delta Corporation. Just for the interest of our audience, Delta Corporation and Econet Wireless, these are the biggest counters listed on the Zimbabwe Stock Exchange by market capitalization, and also these are the most liquid counters. So both of the firms have published their third quarter trading updates. For Delta, the third quarter is for the period ending 31 December 2024, and for Econet, it's also for the period ending 30 November 2024. So looking at Delta, it recorded a 1% surge in revenue for the third quarter compared to this prior period in 2023, and also an increase by 7% for the 9 months ending the same period compared to the prior year. So Tapio, looking at the revenue increase, right? The increase in cordials can be actually attributed to price adjustments. As we saw that the sugar tax in 2024, it was around 0.001 cents per gram. Yes, the authorities have reviewed it downwards starting 1 January 2025. But the first question that I might need to ask you is, do you see this review downwards actually moving the needle in terms of improving the operational leverage for the beverages manufacturer?
All right. Thank you, Kuda, for inviting me here. I'm glad to be here. First of all, the tax component we are talking about is one of the constraining factor, obviously impeding the operation of the company in question, mainly through their contribution to operating expenses, which is the top line of the company in question, and that increase attributed to tax component which we are talking about obviously affects the revenue line of the company down to the last line of their statement of comprehensive income and straight to shareholders' wealth. So I do believe that the downward adjustment of the tax component in question will contribute positively to the reduction in operating expenses, which will later helps the company to be efficient in their operation. Because if we checked last time, the organization adjusted their price as a way of passing through those tax expenses to customers. That's the reason why the increase in their product price. Though the company we are talking about is one of the defensive investments where the demand of their products are a little bit stable, but that increase in prices also reduces the consumption of their products, though it contributes a lot to their revenue, since they are one of the market leaders in terms of production of beverages. So I'm glad with the reduction of that charge.
Oh, well, interesting. Thank you for that. Maybe as a follow-up question, we also saw the volumes overall declining, right, for the quarter by 8% compared to 2023, and for the 9-month period, it declined by 10%. Yes, we know that there are other, just few of its segment, maybe the lager segment, which recorded some quite gains in terms of the volume, but overall there was a decline in terms of its volumes, right? And also this was primarily due to a halt in its exports, the export market. So Obviously, we're in the last quarter because the year end for Delta is 31 March. So are we likely, in your view, to see any changes in terms of its performance for this remaining quarter?
Thank you. I believe there are other issues which reduced the volumes of the products you are talking about, mainly the inputs used by this company in their production, mainly due to El Nino induced drought, which is still an ongoing issue due to its lagging position when we are talking about its impact. We are still facing the issues in terms of production due to shortage of inputs, mainly sorghum, which further reduces the amount in the supply of the products for the company in question. So I don't predict much improvement in terms of volumes, sales and revenue due to that factor, mainly a natural disaster, El Nino induced drought.
Oh, thank you. Well, let's cap it off for this beverages giant, right? So obviously in 2024, about 5 corporates were placed under corporate rescue, and we've seen a lot of formal retailers facing a lot of headwinds in terms of the operating environment. So just share your views. What do you think are some of the impact of the policy framework? You have explained about the climatic changes, right? And also maybe the currency volatility and the exchange rate pressures on this beverages giant.
I'm quite sure the company in question, which is Delta, is facing some huge problems as we are to look into some circulars, mainly based on policy framework. The company in question have some issues to do with tax problems. I read a certain document showing that the tax disputes in courts right now increased to around 70 plus million of dollars, and they're disputing to pay those taxes in local currency, though the authority is expecting to receive those amount in USD. So it's one of the a negative factor which I believe will impact the operation of the company we are talking about, together with other macroeconomic issues like currency volatility and exchange rate issues. But I'm a bit confident in terms of currency volatility, because already now, since the devaluation of ZiG, we experienced a relatively stable environment in Zimbabwe, though it's mainly caused by liquidity issues in the market. There's no enough liquid in the market, which I believe also impact the growth of many companies, not Delta only, and it will spill off to economic growth as well, and will come back again to the operations of the company. Because if we are in an environment where the economy is not growing, which means the companies in that economy will also face some problems in terms of growth. So we will be in one place.
Okay, thank you. Interesting. Well, there you have it, dear viewers. Now let's move on to Econet Wireless. So on Econet, for obvious reasons, I didn't want us to delve into those figures in ZiG, because I'm sure, as you know, for the 9-month period or even for the quarter that the group is reporting into, it's in ZiG, but the comparable period in 2023, there was the Zimbabwean dollar then. So converting, I'm sure you can see that there can be a lot of distortions there. But let's look at the figures. There was a 20% increase in voice usage over the quarter ending 30 November 2024. And there was also a 36% rise in data usage for that third quarter, so to speak. But as we are looking at these numbers, these are the same period where we saw Starlink's entrance into the same field, and this was seen by a lot of people as a potential disruption for Econet, but we're seeing this surge in these numbers, right? And also this is the time actually where we are seeing a lot happening in the market. Let's talk about your views in terms of the group's competitive edge as well as the going concern status of Econet.
Thank you so much. I'm quite sure and I'm very positive about the growth of the company in question, which is Econet. Mainly because of the absorption of internet-based programs and application and data usage applications in Zimbabwe. The road is very clear, and growth is inevitable for this company. If we are to look into other data released by a guy called Simon Kemp of Data Reporter, he mentioned that the usage of cellular cell phone in Zimbabwe stands at 13.88 million, which is around 82% of Zimbabwean population. Okay. And the internet penetration in Zimbabwe as of last year stands at 5.48 million, which is around 32% internet penetration in Zimbabwe. And the usage of social media in Zimbabwe is at 2024, based on data, that data was at 2.05 million, which is around 12% of the Zimbabwean population. So if Econet manages to ride on those numbers in terms of the absorption of internet-based application, the use of data, everyone right now is using data to access, even to make payments, or to access some applications like InDrive, to access a lot of things, social media platforms like LinkedIn, Facebook, and everything. Almost each and every professional or a civilized citizen in Zimbabwe is in need of those things.
Using mobile operators, which are mobile wherever you go.
Yes, so I'm very confident that due to those factors, we're going to see a big surge in terms of data usage and the revenue on those components.
Okay. Yeah, true. Thank you. Let's look at the fintech. We saw all of the assets except for Stewart Bank, which were under EcoCash, being acquired by Econet Wireless. So now Econet, obviously there is that MNO segment and also the fintech segment, which comprises of the likes of EcoSure and Mover, right?
Yeah.
So we actually saw a 55% increase in active subscribers and also a 79% rise in terms of wallet funding. So these are growth numbers, right? But this is also coming at a time where we are seeing a lot of entrants in terms of mobile money platforms, be it the likes of Omari, and recently I'm sure I saw Stewart Bank actually launching its cardless withdrawals and deposits, which is also likely to be disruptive in its nature in this same field where we are seeing the fintech platform experiencing growth. How do you view this development?
Thank you so much. I believe the reintegration of EcoCash back to Econet is a good move, and it came at a right time. If you are going to check their financials, they were struggling in many angles when they were a standalone business, but their reintegration back to Econet helped the company in terms of operating signage, in terms of reducing cost, mainly due to duality of management between EcoCash Holdings and the Econet. And in terms of operating signage, we are talking in the side of revenue. If you check now, the revenue contribution of EcoCash and Econet, they are now in the one pot, and it's very easy to drive those companies all together than to let them operate separately. So I believe that reintegration of their subsidiary back to the main group is a good move, and we have a very positive contribution to the growth of the company.
Okay, thank you. Now let's keep it up by looking at Tanganda. Well, in October 2024, the board of directors of Tanganda, they actually announced plans to delist from the Zimbabwe Stock Exchange and relist on the Victoria Falls Stock Exchange to raise capital in United States dollars, right? And which has been also the trend that we've been witnessing over the past few years. But later we saw the group actually abandoning that same initial idea, and recently they've issued a cautionary announcement highlighting their plan to actually list new shares on the Victoria Falls Stock Exchange and maintain the current shares on the Zimbabwe Stock Exchange to raise 8 million United States dollars. So the first question that I might need just to ask you, in your view, what do you think is the reasoning behind them abandoning and ditching the first plan of delisting and relisting?
Yeah, thank you so much. I believe the main issue which affected the first decision is based on liquidity issues in terms of those two capital markets in terms of turnover. If we check Victoria Falls Stock Exchange, there is a sort of some liquidity issues. The funds are not moving that much as compared to Zimbabwe Stock Exchange.
Because a lot of them, they use USD for their operational and working capital.
Exactly. So I'm sure as they are trying to maintaining the controlling power of their shareholders, it's a good move for them to list a class of shares on Victoria Falls Stock Exchange and leave their main counter on Zimbabwe Stock Exchange. Because there are a lot of benefits of remaining on Zimbabwe Stock Exchange, because that market is a bit liquid as compared to Victoria Falls Stock Exchange, because everyone is using ZIG in Zimbabwe for trading. So in terms of trade, it's a good move, and they are going to raise those funds on Victoria Falls Stock Exchange, mainly because of their move to give the first preference to the existing shareholders. So it's a quite good move.
Okay, and my final question on this one, we saw the Reserve Bank of Zimbabwe introducing the targeted finance facility, right, where they want to actually provide some sort of liquidity for companies in productive sectors, which also include agriculture, the same as Tanganda, which wants to list on the Victoria Falls Stock Exchange to raise 8 million, but these funds are denominated in the local currency. So the question now is, in your view, I just want to understand your thoughts. Are businesses in need of United States dollars? Are they in need of ZIG? Are they in need of both? What's your thoughts on that?
I think it's 50-50. It depends with the market environment or the size of the market of a company. If we look at Tanganda, it's an international company. They export, they import some of the things, so they need US dollar for their operation. So that's the reason why they are deciding to list a class of share on Victoria Falls and they remain on Zimbabwe Stock Exchange to lubricate their operation locally using the local currency. So it's 50-50 based on the market size saved by a company. So for Tanganda, I'm quite sure they need 50% in ZIG, 50% in the US to maintain the efficiency in terms of operation of their company.
Oh, thank you, Tapiwa, for being with us. It's actually a pleasure being with you here, and thank you for sharing your views and your thoughts. Dear viewers, there you have it. You might have your own comments, thoughts. Please feel free, share with us what you think, and we're looking forward to having you on our next exciting episode. For today, we thank you for joining us. Please enjoy your day and have a good weekend. For now, it's bye-bye.
Thank you.